Pantheon AI presents Google's $900 billion secret weapon versus NVIDIA. Bitcoin defies stock market crash. Welcome to the PAI Morning Briefing, everyone. It is Tuesday, September 2nd, 2025. I'm John, and as always, it's great to have you with us.
And I'm Sarah. Good morning, John. You know, roller coaster ride feels like the perfect way to describe the markets lately. So grab your coffee, everyone, because we have a lot to unpack.
We certainly do. Let's jump right into the numbers. Looking at the major indexes, things are a bit mixed. The S&P 500 is trading around 63.62, but it's taken a slight dip of about 0.6%.
And the Dow is following suit, right? It's sitting at roughly 44,978, down about 0.7%. So a bit of a slide in the traditional markets?
Exactly. Even the tech-heavy Nasdaq is lagging with a small drop of 0.1%, and the Russell 2000 is down about 0.3%. But Sarah, this is where it gets interesting.
I think I know where you're going. Bitcoin?
You got it. While equities are sliding, Bitcoin is showing that classic resilience. It's trading around $110, 962, with a nice uptick of 1.6%. Ethereum, on the other hand, is a bit quieter, down just a fraction.
It's always fascinating to see digital assets bucking the trend like that. It's a great reminder that the market is this multifaceted puzzle, and there's always a surprise somewhere.
Well said. And that actually brings us to our deeper discussion on major trends. For months, we've been watching this interplay between traditional stocks and crypto. But Sarah, let's talk about the giant in the room, Google.
Oh, this story is incredible. The idea that Google might be sitting on a $900 billion gem? I mean, that's just staggering. We're talking about their tensor processing units, or TPUs, right?
That's the one. Analysts are saying these TPUs are a serious alternative to NVIDIA's chips. Imagine if Google spins that off. We're talking about a potential spin-off that could rival a major corporation and completely shake up the semiconductor industry.
It's a huge what if that could cause ripples everywhere. And then you have this other dynamic with Bitcoin. You mentioned it was bucking the trend, but what's really interesting is how it's performing relative to gold.
Right, so stocks are slipping, but Bitcoin is edging higher. However, its climb is actually trailing behind this massive rally in gold, which has hit new record highs. What do you make of that?
Well, it's like investors are playing both sides. It's a classic diversification strategy, isn't it? They're being digital daredevils with Bitcoin, but also sticking to the old school safety of gold. Hedging their bets in a very 21st century way.
That's a perfect way to put it. And speaking of mixed signals, the economic forecasts are all over the place. The Atlanta Fed's GDP Now tracker just dropped its third quarter forecast from 3.5% down to 3%.
But at the same time, Goldman Sachs actually ramped up their overall GDP forecast to 1.7%. It just goes to show that forecasting in this volatile environment is more of an art than a science. There's a lot to chew on.
Definitely. And one area that's not feeling optimistic is U.S. manufacturing. The latest ISM report shows the sector has been contracting for 6 consecutive months now. The effects of those tariff wars are still lingering.
I saw that. One manufacturer even said, "These tariff wars are beginning to wear us out." You can just feel the exhaustion in that quote. It's a stark reminder of the real-world impact of these policies.
Absolutely. Okay, let's dive into some of these stories in more detail. We've got about a dozen key things on our radar, and we want to give you the story behind the headlines. Sarah, let's start with that Google TPU story again.
Right, so beyond the $900 billion headline, the real question for investors is, what does this mean for the future of tech? If Google's chip business becomes this standalone behemoth, could we see the power dynamics in AI completely redefined?
It's both exciting and a little nerve-wracking. It could create a whole new landscape for competition and innovation. Now for our second story, let's go back to Bitcoin. It's holding its own while stocks are down, which is impressive.
But as we said, it's not quite keeping pace with gold's record-setting rally. This really sparks that debate. Will Bitcoin ever truly rival gold as the ultimate hedge against market volatility? Or is it always going to be its own unique, wild ride?
A question for the ages. And our third story, those dueling GDP forecasts. The Atlanta Fed cools things down, Goldman Sachs heats them up. It feels like a tug-of-war between data points. The moral of the story for investors is probably to expect more revisions and less certainty.
So true. And that brings us to our fourth point, the ongoing challenges for U.S. manufacturers. That sixth straight month of contraction is serious. It's like a long, exhausting marathon, and it can affect everything from jobs to consumer spending.
Let's pivot to a sector that's always in the background, energy. No huge headlines today, but there's a lot of pressure from environmental regulations and shifting global demand. The big question is how investment will shift between traditional oil and the next wave of green energy.
And in the finance sector, it's a similar story of adaptation. Banks are navigating fluctuating interest rates and regulatory changes. It's a delicate balancing act for them, trying to innovate with fintech while managing risk. It's a sector with some definite growing pains.
All of this really ties back to geopolitics and trade policy. Those tariff wars might not be front-page news anymore, but as we see with manufacturing, the effects are long-lasting. It leaves you wondering if we're headed for more stability or just more adjustments.
And amidst all these challenges, you have our eighth story, the relentless march of innovation. Investment in AI, robotics, and big data is just soaring. Of course, that comes with its own set of debates around privacy and ethics.
It's funny, isn't it? Half the world is buzzing about the latest AI gadget, and the other half is deep in discussions about regulatory compliance. It makes the tech world endlessly entertaining.
Definitely, and let's not forget about real estate. Remote work continues to reshape property values, and that has a huge, quiet impact on consumer confidence. How will our cities and suburbs adapt? That's a massive question for the future.
Speaking of the future, we have to look at the global market implications. What happens in the U.S. doesn't stay in the U.S. European and Asian central banks are all reacting to these same trends, trying to find the right policy balance.
Which leads to our 11th point, investor sentiment. Despite all this, John, it feels like the mood is shifting from outright fear to a more cautious optimism. It's like the market is saying, yeah, today is tough, but tomorrow's breakthroughs are coming.
Every cloud has a silver lining, even if you have to squint to see it. And finally, a bonus thought. Technology is embedding itself everywhere. AI isn't just in a lab. It's in our cars, our banks, our healthcare. It's a total transformation, and investors have to think about how that ripples through every single industry.
That's a great summary of the landscape. So let's do a quick sector-by-sector analysis. In tech, it's all about that Google TPU story. It just proves the industry is still full of surprises. It's not just about ads anymore. It's about powering the future of computing.
And it puts the pressure on established players like NVIDIA to keep innovating. Maybe tech stocks should come with complimentary stress balls. Now shifting to energy. While it's quiet now, everyone is watching for policy cues that could signal the next big move in renewables.
And as we touched on, the finance and manufacturing sectors are in a state of adjustment. Manufacturing is facing headwinds, but that could lead to a renaissance in domestic innovation, as companies are forced to adapt their supply chains.
That's a great point. The pain today could lead to more resilient operations tomorrow. So what are the experts saying about all this? The consensus seems to be that adaptation and innovation are the keys to everything.
Exactly. The long-term trends, like digital transformation and sustainable energy, are what will guide growth, even if the short term is volatile. It's all about navigating the current environment while keeping an eye on the future.
Which leaves us with some big questions for our listeners. What happens when tech giants like Google unbundle their businesses? And will Bitcoin ever really take over gold's role as a safe haven? These are the conversations we should all be having.
So let's wrap up with some key takeaways. First, while indexes are weak, alternative assets like Bitcoin are telling a different story. Second, tech continues to be a hotbed of disruption. And third, the challenges in manufacturing highlight the need for adaptive strategies.
And finally, that no market is an island. Global dynamics connect everything. Sarah, it feels like we're spinning plates at a carnival sometimes. It's exciting, unpredictable, and a little nerve-wracking.
That's the perfect analogy. But our job is to keep a balanced approach. A huge thank you to our information co-pilot, Pantheon AI, for providing the data that makes this conversation possible.
Indeed. And as you go about your day, remember you can always reach out to the AI co-pilot for a deeper dive on any topic. So we'll leave you with this to think about. In this era of change, what sectors do you believe hold the most promise?
Thanks for joining us on the PAI Morning Briefing. Tune in tomorrow for more. And remember, in this dynamic world, learning shouldn't feel like a full-time job. Stay curious. Pantheon AI, your information co-pilot.